some important data coming up on Friday in the US. But in any event, we'll get to that in a moment. Just want to quickly run through a couple things right now. This is the chart that you see in front of you is the British pound JPY currency cross. It's a 1 hour chart, 60-minute chart. And I just want to show you this real nice technical head and shoulders that's currently forming. We see here the price has come down. These dark red lines are your pivot points, and the thinner gray lines are your S1, S2, R1, R2. We see price here has come down and formed a low here and consolidated somewhat. Price dropped below the lows, and we see a MACD divergence. Price within the same session, these vertical lines separate the days. Price within the same session came down, failed to make a new low, pushed upwards, consolidated through Asian session. As London opened the following day, price spiked down roughly to the backside of this trend line, rallied up on a it was a big day fundamentally for the UK, and we'll get into that just quickly in just a moment. But in any event, big day for the UK with a couple of economic reports, and rallied against, of course, here in this case, the yen, as well as the US dollar, as many of you have seen. It has since retraced during Asian session, and what I want to show you here is step one, prices cross through the trend line. Step two, prices come back to the previous level of resistance and beyond. The further it goes up beyond this level of resistance, the less likely it is to go down and make new lows, particularly in the next session. And price is now retracing. If this is a head and shoulders that could come to fruition, we want to find the entry point to trade in the anticipation that the next leg will be up. And often the second leg up can be a considerable one. This could be considered a second leg somewhat. In any event, we will just looking at price action here. We see how price moved above this level and pushed up to form our level of resistance, and we are now looking for another leg up potentially. So if we want to participate in that leg up, we need to find an entry. At present, price has found support at this level of resistance. It is now finding support live. That red arrow moving up and down suggests that we are in a live active market at present. This red line is the central pivot moving into the new day. I want to take my Fibonacci tool and I want to find out where we are resting after the last day's move. Why did you take that low, Chris, and why didn't you take that low or that low? Well, my thought process behind this is that Fibonacci being the principle that, or the foundation on which we like to consider here, is that price is moving or people are patterning their behaviors in a Fibonacci numerical sequence or in a Fibonacci rhythm, and therefore I'm just taking the surge from this day, intraday surge, to the high, back to the low, and is resting on exactly, as you'll see here, it's resting on exactly the 38% retracement, and currently finding support at the 38% retracement. You could come back and place your Fibonacci tool from the very low, and here are 38% retracement, which is just below the resistance and meets the central pivot. And those of you who have been in recent seminars know that I look for this Fibonacci and 38% retracement as a real strong level of support offered with these highs. All right, now let me just get rid of the pivot points. Just to kind of clean up the chart a little bit. Now, here's what I'm thinking. You can either find an entry somewhere here at this level of support, wait for some down ticks, wait for a testing of these levels. You could enter here, but your stop is bigger and you're further away from your profit limit. If it makes you feel more comfortable, you see these lows right here, the left shoulder lows. You see how it converges with the 62% retracement level here. You could actually place a limit order in or around between the 62 and the 50, in and around that area, with the possibility of a spike down prior to the next leg up. Well, how or why could we consider this? Well, one thing is that given news coming out of Japan right now is not necessarily that strong for the yen. And at the moment, the Japanese politicians have been jawboning their currency and somewhat preventing or inhibiting the yen from building some strength, since the recent moves have been somewhat considerable, and the yen has been strengthening against other currencies. And as we've seen some retracement here against the pound. Alternatively, news out of the UK has been quite strong, and it's important to follow that to see the weighing of the news coming out of the UK versus Japan, therefore suggesting some bullishness for the British pound versus the Japanese yen. And here we see it setting up technically. So we have somewhat of a convergence between the technicals and the fundamentals. And when I offer this kind of information, I'm not saying that price is going to move from here down to here in the next hour and then up to here 3 hours later. What I'm saying is we have to watch price. Price could shift, change. We could change our whole view on this within the next several hours. But at the moment, this is what it looks like. You can trade the low here for potential move up to these highs and beyond, or you can wait for it to retrace lower. But I would be somewhat less inclined to be taking a bearish position in this situation. I believe that probability is on the bullish side in this case. Okay, and let's just move over. So there's our. What I want to do is I want to show you sort of some of the relationships here. Here we see, of course, the British pound has rallied against the yen here now, and let's look at the British pound against the U.S. dollar. Some very interesting news that happened over the last 24 hours, and just let me give you maybe a bit of a summary, a very generalized summary of what has happened lately. We've had some disappointing figures coming out of the U.S. Actually, there were some hints and some comments made early in the session, actually in the late Asian session, that caused the U.S. dollar a little bit of a rally, as we've seen here, actually here before the leg up. And there was some news that came out of the U.S. Treasury, which they just sort of made a comment that they didn't actually label China as a currency manipulator, and you can actually go in and check your news feed on that. And that comment just stimulated some U.S. dollar buying or release of the selling for a time period while the markets were thin during the Asian session. And then there are also some U.S. congressmen having some discussions around pursuing legislation or delaying pursuing certain legislation, causing the euro and the British pound to fall or the U.S. dollar to rally somewhat. There was some strong GDP data from Germany as well. There were some very hawkish statements from Trichet concerning inflation and interest rates. There was some very strong manufacturing production and industrial production numbers out of the UK, which really ultimately stimulated this rally here. All right, which started earlier in the session, and it actually started early in the session. And when the report came out, it actually continued. So we started out in anticipation, giving back the U.S. dollar gains prior to the report. Then the report came out and rallied following the report, pushing the pound much higher, and it's become a very strong and excessive rally in this case. To complement that, we had some weak retail sales in the U.S. as well. And what's really interesting right now is that there seems to be a deviation between what the bond market is pricing in for inflation versus the U.S. Fed. There seems to be some disagreement between the behaviors in the market and the bond market and the statements or the tone of the U.S. Fed. And the bond market is actually suggesting that the Fed should be more hawkish or should be leaning more towards raising interest rates at this time. And so today, actually, bond yields rallied, which means bond prices fall, the yields rally, and the 10-year actually rallied by 0.30 basis points. In any event, this is sort of some of the things that are happening. We see on a technical level from this low, we've seen price sort of drifting, slowly laboring higher, and the market does labor higher when we start to see these 79% retracements. And we now see a rally coming to the extension of this level, the 162% extension. And of course, we're nearing 8,900 right now at the open of European session. The pound has actually made a small rally, and what this suggests to me is that this small rally, we have to watch what happens here in this British pound small rally if we're going to continue keeping our eye on prices over here with the pound yen cross. All right, and on that note, let's just move over to the yen. I'm just going to stay within this platform. I actually didn't anticipate this was going to be as long as it's taking at the moment, but there's always lots to talk about. Yen's actually yen's rallying. So yen's rallying right now, pulling down the pound. They're probably actually more or less in a neutral state, based on the relative strength of the yen and the strength of the pound is seemingly somewhat neutral. So so that could make the pound yen rate trade a little bit choppy. Something else I'm looking at here. Actually, one of the things I want to show you is first let's go to the British pound daily chart. If we look here at the British pound daily chart, quite often if we see pennants like this, the middle of the pennant is a support resistance line and often offers support resistance at some time in the future, which in this case is at 190.30, roughly 30. I'd actually peg it more around 190. And what that is that level is also the 79% retracement from the highs of December 2004 and the lows of November 2005. It is a 79% retracement here. You can see this line right here. It is a 79% retracement on the British pound, and it's up in the 190 area. So I would look for some resistance there, potential nice bounce there. And here, a trend is your friend, and a trend is your friend for a time. But this is incredible U.S. dollar selling combined with strength coming out of the UK economy, and so we're looking at 190 up here. But the question to me is, how is this synchronized with what's happening in the euro? And so you want to look at doing analysis on euro for that. But you want to check to see sort of where euro is technically relative to the pound. And the more they are synchronized, the higher the probability of the bounce in this area. Okay, and just once again going back to our pound yen. If I were to want to make a trade, I would want to make it down here. If we can see a little bit of a move down here, if we see a move down this way towards 207.28, then we can actually be more like around 40-ish. Look for a move maybe towards 40, or that might even be pushing it a little bit. If you really want to push it, go for the 62% retracement. And of course, in which case you would go to your trading platform. Right now we're seeing this is the British pound 15-minute chart, and we're seeing a rally at the moment. So this is just a little more of a close-up look. But if I wanted to make a trade, I would go to my first of all, I would want to view my workspace list, which gives me all of the workspaces available that I have set up here. Pound yen workspace list. Minimize my workspace list, and Here I've just got a couple of charts that I've made available to myself. They just scroll down here and looking at, first of all, looking at our daily chart, we're actually really in the middle of a narrowing consolidation, and price needs to make a decision at some point here, and we've been in consolidation since effectively last October. Keeping that in mind, moving down to a 15-minute chart, we're seeing of course our head and shoulders as we've seen on the larger time frame, and price has already come down and somewhat tested this 207.50 area. But as I showed you in our last session, if you do make a trade down here, then you have a better chance of getting out, if it moves against you, getting out at even, as we saw, and making some profit before price starts to move up and move beyond the highs. You actually can get something out before it breaks through the highs. All right, and then of course if I wanted to make the trade, I would press on my new order window and make the appropriate trade, in all likelihood apparent and contingent order, setting the trade accordingly. But I apologize, I'm not going to take the time out to do this today, but just sort of wanted to show you how that function worked in general. Looking at our news feed and what's happening in the European FX Open. Just taking a quick glance here. Focus on further U.S. dollar slide and speculation of a sharp rise in the U.S. Oh, trade deficit. Thank you for reminding me, by the way. Let's go to trade deficit. Trade deficit, trade balance right here, coming out at 8:30 in the morning. Forecast is down 67 billion versus previous of 65.7 billion. And folks, this is really sliding because we were in the 50 billion range, 50 to 55, 50 to 60 billion range not too long ago at all. We're sliding to 67 billion. Some of the decline in the forecast for this month is being attributed to some vacation and lack of business and commerce activity that's happening in China, and therefore a decline in imports from the U.S. So therefore having an effect, of course, in the terms of relatively in billions of dollars to the U.S. So that's one of the things that's been priced in here. And the other thing you want to watch for, of course, University of Michigan Sentiment Survey, which comes out at 9:45 Eastern Time. And as well, that's been on the decline somewhat. All right, folks, and I think I'm just going to call it a day because I've got a couple of things that I need to get to here, as usual. No surprise. And I will catch up with you later. I'm just going to take one last quick look to see if there's anything I might have forgot that I thought I wanted to bring up. And, I just don't think so. I think I'll just move on from here. Let's just take a quick look at what's happening with our yen. And right now we're looking at our yen to see if the, I just want to tell you what I'm thinking right now. Previous day's low, section on it in your book. It's failing at the moment. Well, actually, no, it's not failing. If price continues to trade down here below, I would say the 110 area. If we trade below the 110 area and hold, then that is bearish for yen. It's bearish for yen, and depending on what happens with the pound, we want to watch. All right, so we're thinking bearish yen there, and if the pound holds and trades above this level here, then that's a bullish pound. But if the yen continues to fall and the pound does not hold above these highs, then that's bearish for pound yen. It is bearish for pound yen, and therefore we could see a retracement back here somewhere before our next leg up. All right, and that's it, folks. Bye for now. Thanks for coming out, and be careful out there.